Ladies and gentlemen, good day and welcome to the Q1 FY23 earnings conference call of Hindustan Oil Exploration Company Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of FY23 Limited. On behalf of the company, I'd like to thank you all for participating in the company's earnings call for the first quarter of financial year 2023. Before we begin, let me mention a short cautionary statement as always. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. P. Lango, Managing Director, and Mr. R. Jeevanandam, Executive Director and Chief Financial Officer. Without any further delay, I request Mr. Lango to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good morning, everyone. Glad to connect with you all on this Q1 earnings call for FY23. Jiva, our CFO and whole-time director, is with me. Valorem Advisors, our investor relations advisors, are also on the call. I hope everyone has received our updated earnings presentation. We've also uploaded it on our website for your reference. Q1 FY23 marks an important milestone in the development of our discovered small field DSF block B80 in Western Offshore. We achieved first gas and first oil production in June after all the installed facilities were integrated and commissioned. After executing the agreement with ONGC and meeting the required specifications, the commercial gas sales commenced to GSPC on 4th of June. Initially, the D2 gas well was flown at a lower rate to stabilize the operational parameters. Post-stabilization, the flow rate was increased to meet the committed sales volume of 10 million standard cubic meters per day. During June, the average gas sales rate achieved is about 7 million standard cubic feet per day. D2 gas well successfully demonstrated its ability to deliver production of over 12 million standard cubic feet per day. However, we could not achieve the same success in D1 oil well. We thought we had addressed the technical issue in D1 actuator line. However, the problem recurred after few days of production. Therefore, we had to keep the well shut-in condition. It appears that a permanent solution can be found only post-monsoon after a comprehensive underwater survey. Intensification of monsoon and the resultant rough weather is leading to challenging marine system performance, causing disruption to offshore production operations. Our integrated marine system is witnessing the first monsoon post-commissioning. Severe weather conditions caused snapping of the hose that connects convoy to FSO. Consequently, production from D2 gas well had to be shut down on 14th July, and our initial attempt made to reconnect was not successful. We plan to rectify and reconnect the hose in the first available weather window and resume the production from the gas well as soon as possible. Post-commissioning operational issues are being handled on a day-to-day basis, targeting stable and sustained production operations. Overcoming the operational challenges and bringing the production operation of B80 into a stable mode remains our top priority. Considering that the wells are performed to our expectations, we believe that we will be able to overcome the remaining challenges post-monsoon. At our northeast onshore block, Dirok, we had to limit production due to an unplanned shutdown of BCPL plant during April and May 2022. This has reduced our average production in Q1 to about 25 million standard cubic feet per day. However, share of premium sales is being maintained at a healthy 40%. Subsequent to BCPL coming online, we are witnessing improved offtake. Dirok reservoir performance continues to be good. Productivity of the 3 new wells drilled in the last drilling campaign remains very healthy. We are confident to meet the current peak market demand with existing 6 wells. To meet the long-term gas demand, particularly as the Northeast gas grid gets implemented in phases, connecting multiple demand centers, we are continuing with the preparatory work on the Dirok Phase 2 development. We have secured the environmental clearance. Recently, we received the working permission to lay the 18-inch pipeline in the forest segment. In PY1 Eastern Offshore Field, where our participating interest is 100%, an in-house designed low-cost gas dehydration unit was commissioned. We achieved the dew point specifications of GAIL and gas sales recommenced during May. Internal geological studies have been completed to plan the next drilling campaign in this unique fractured basement reservoir. Although the current output from PY1 is quite low, we are optimistic that the drilling program will return the field to its full potential. The final investment decision will be made following an independent technical review and risk mitigation. In Kassam, normal production operations are continuing. PSC extension is still pending. There are differences between the contractor and the government as to the amount eligible for cost recovery. Discussions are still ongoing between the government and the operator. The cost recovery eligibility issue will now be referred to Dispute Resolution Committee. In our Cambay assets, under approved field development plan, we will be drilling 2 development wells at Asjol and North Balol each. At Palej, ring-fenced PSC has been signed by the JV parties for R2 area and has been submitted to Ministry of Petroleum and Natural Gas. Final execution by government is still awaited. The mandatory public hearing was completed as part of the environment clearance process. Further development drilling will be undertaken after execution of the ring-fenced PSC for Palej. In other northeastern blocks, Kerem and Umatra, there has been further progress in the regulatory process for forest and environmental clearances. In Greater Dirok block, the potential drilling locations are identified. The land acquisition and preliminary EAA studies will be initiated in the near future. Coming back to BAT, frankly, we had not anticipated the startup challenges that we are facing in BAT, especially after the onset of monsoon. We do not have adequate resources and appropriate in-house marine expertise. Mobilizing marine assets and resources also takes a lot of cost and time. Fortunately, there are no performance issues related to reservoir and both the wells are capable of delivering the expected volumes. I now invite Jiva to share the financials.
Thanks, Elango. We report that the company made a revenue of rupees 65.66 crores in the current quarter against 38.84 crores in the previous quarter. In the Concall account, it is 93.42 crores against 44.42 crores in the previous quarter. Increase in revenue is mainly from BIT gas sales from 4th June 2022 for rupees 13.45 crores, an increase in sale of gas in Assam about 12 crores, mainly on account of higher realization for condensate and gas due to high prices. The profit on standalone is 34.21 crores against 23.47 crores in the previous quarter, excluding exceptional in the previous quarters. In the Concall accounts, the profit after tax is 32.7 crores against 7.6 crores in the previous quarter. The total expenses of standalone including DDA is 35.99 crores comparing 20.85 crores in the previous quarter. Statutory levies, royalty and cess are ad valorem, which is increased from 6.59 crores to 9.74 crores. As BIT being operational from 4th June 2002, operating cost of BIT along with other blocks has increased the cost from 5.46 crores to 22 crores. In the consolidated accounts, it is 59.08 crores comparing 36.34 crores in the previous quarter, including the stock adjustment. EBITDA in the Concall accounts for this quarter is 52.23 crores comparing 22.3 crores in the previous quarter. Consequent to the commencement of production from BIT field, the capital work in progress of 514 crores moved to oil and gas assets in the current quarter. Similarly, the offshore installation of subsidiary used in BIT, that is the MOPU, moved to operating assets from capital work in progress. With the commencement of BIT field, offshore installations, that is the MOPU, FSO and SBM owned by the wholly owned subsidiaries are in revenue mode effective 4th June 2022. On production from BIT, with the support of ongoing high prices of oil and gas, the company can meet its obligations. Ensuring the continuous production from BIT, we will embark on the development of dormant assets in Western region and FY1 with appropriate capital infusion. Thanks, Elango.
Thank you. We can open the forum for questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Akshay Satija from Alpha Investco. Please go ahead.
Thank you so much for the opportunity and congratulations on BAT. So in our presentation, we mentioned that we have some topside issues. Are these issues regarding to the production separator as such? Hello?
Members of the management, we cannot hear you.
So in our presentation, we've mentioned that we have some topside issues. So if you could throw some light on it, is it regarding the production separator or?
Yes, we have 2 separator systems in the plant. With one system, we will be able to essentially produce from both the wells. We have a problem in one of the separator systems delivered by Expro, and they are now looking at either rectification or replacement of the system. But currently, that is not really a constraint to bring the wells on production.
Okay. So just to follow up on the earlier question, so what would be the capacity of our MOPU, including the production separator and test separator respectively? So can we run both production and separator in parallel, and what would be the combined capacity of the MOPU with these?
So we would, so far we have put the D2 gas well on a continuous production mode. And
Okay.
D2 at its peak was able to deliver about 13.5 million cubic feet of gas per day with the existing system. The oil wells, as you know, we have some technical issues to be addressed. Nothing related to the well per se, but the actuator line which is required to be on a pressurized condition to keep the well on open condition. Now that well we were not able to flow continuously for a longer period, which is something we will be able to do post-monsoon. And we do expect with both the wells, we've not really tested them to their full capacity, but we should be able to deliver the targeted volume of roughly about 4,500 barrels of oil and the committed volume of 10 million cubic feet of gas per day after internal consumption. So we are comfortable that these two wells can deliver the volume that we have indicated. And topside facilities with the existing system can handle that, but the additional separator system would also need to be rectified and refurbished.
Okay. Got it. So, yeah, that's it from my side. Yeah. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants, we would request you to please limit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Akshay Ajmera from Hindustan Securities. Please go ahead.
Yeah, thank you for taking my question, sir. So my question is regarding your earlier opening comments on the MOPU revenue. So as we understand that from 14 July, the field remains shut in. So could you please clarify if the MOPU revenue are still on and the standalone entity is paying to the MOPU when we are getting MOPU revenues as such?
Okay, thanks for the question. Actually, now the fundamental fact is this is a separate contract with the BIT field with our subsidiary company. So normally any facilities of this nature on contract will have certain allowed downtime thereon. If there is the downtime exceeds that limit, then we have to charge there. But in this case, there is no problem because of the MOPU that only the separator issue and the small issues are coming. There should be a reduction in the revenue thereon. And similarly with our other facilities of FSO thereon, wherever there is no operation thereon, we have to take a cut in our operating costs to standby rates.
So if you can just clarify once again, because it was very difficult to comprehend. So basically, my question is, there was a communication earlier that $90,000 will be the revenue per day. So how much it would be from 14 July onwards, since both the wells are shut in? That is the understanding that
yeah, the 14th July onwards, because MOPU, the revenue would be as it is, and FSO revenue, which is on account of the parting of the hose and other things, would be reduced to zero. That would be around $48,000.
48,000. So roughly $50,000 will be the revenue that we will be generating.
Yeah, that's right.
Okay. Thank you so much, sir. I'll get back in the queue for that.
Thanks.
Thank you. The next question is from the line of Vardharajan Shivashankaran from Antique Limited. Please go ahead.
Thank you for the opportunity, sir. So on this windfall tax, how are we impacted? Any clarification on that?
There is no impact on us due to the windfall tax. Zero impact.
Is there any limit in case we push the production up, or do we come under the 100?
I think Jiva will explain detail.
The windfall tax has come out with the 2 factors, and first with the volume of production. If the volume of production on the previous year is less than 2 million, there is no tax in the current year. So we will not be able to reach the 2 million barrel production, oil production thereon to it. So that effectively there would be no windfall tax on us.
Right, sir. Any guidance you can give on the cost we are paying to ONGC in terms of processing as well as transporting our gas?
Transporting
gas through ONGC line. Then there is tariff charges. Tariff charges would be there. Tariff charges would be a part of operating cost there.
Yes, and processing also we are paying some charges for that.
But
yes,
any processing charge we are paying?
Yeah, transportation and processing is clubbed together under one agreement with ONGC, and we pay that.
So it's a processed gas, but however it is getting commingled with the ONGC production, we have to pay for the tariff charges as agreed with them.
Thanks, I'll come back.
Thank you. The next question is from the line of Manan Patel from Airavat Capital. Please go ahead.
Thank you for the opportunity, sir. Sir, so first of all, I wanted to thank you for making such an effort despite such difficulties in GAT. So, thank you for that. And thank you for being transparent as well. Sir, my question is that we have committed a volume of 10 million cubic feet to GSPC. So will there be any penalties if we are not able to deliver it for, let's say, whatever time it takes to bring that back online?
Yeah, there is in the gas sales agreement that we have executed with GSPC, we have made the first year free of any take or pay or supply or pay obligations. Just to ensure that both their side and we side have time to stabilize the operation. So therefore, there is no penalty for non-supply. However, we give a forecast to them about every fortnight related to what would be the estimated production. If during that fortnight, they would book the capacity for transporting the gas in the GAIL system, whatever actual cost they incur based on our forecast, which is given on a fortnightly basis, if we are not able to deliver that volume, we will compensate them for that, whatever cost that they have paid to GAIL. So that's a very small amount, but there is no penalty for non-supply.
Okay, got it. That is very helpful. And the second question is regarding, you mentioned that we don't have adequate marine resources and it takes time and cost to make it working again to the entire system. So how much cost do you estimate, and if you have any, like once the monsoon weather window is available, how much time can it take to bring back the production, time and cost? And because the Expro is also involved and other vendors might be involved, do we charge the cost that we incur to these vendors?
I will ask Gio to give an overall estimate of what it would cost to rectify the total system. But in terms of, so far there are two things. Whenever there is any operational issue in the offshore system, first thing is we needed to mobilize a suitable vessel. Typically, a vessel mobilization involves that you find what type of vessel is required to fix the particular issue, and then you need to go through a regulatory process of getting Ministry of Defence and Naval clearance for the vessel to go to our location. And then typically there are two types of divers depending on the nature of the problem. There is up to certain water depth, air divers are deployed. They are available within the Western offshore system. We mobilize the air divers, they go and fix the issue along with the tools and tackles that are required. That's one level. If the problem that requires addressing at a deeper water level depth beyond what air divers can access, then that requires a saturation diving system with saturation divers. So far, we have used for underwater inspection of that nature ONGC vessel, and ONGC has been very, very helpful in diverting their vessel to support us. But there are certain tasks which is not to be performed during monsoon for safety reasons. So one of the things that we are very keen is to ensure that whatever we do, we do it within the acceptable safety norms. So we've been very careful on that. In other words, whatever troubleshooting they are doing is kind of temporary fixes. For a permanent fix of the total system, please remember two things. One, both the wells are absolutely have no problem. The wells themselves have delivered to our expectation, although we are yet to put the oil well on a longer duration. As far as the MOPU, the Mobile Offshore Process System, is concerned, it's structurally very stable. It has some minor issues related to Explore supply the equipment, which Explore need to replace under the contract, repair or replace under the contract, that we don't have to incur any expenditure. So the MOPU system itself does not require any major changes. The wells are behaving fine, and the flexible pipeline flow line that are connecting is also in good shape. Where we have had problems is hoses that are connecting FSO to Convoy, as well as certain part of the chains and stuff, which due to the weather condition either snapped or we had problems on those lines. So finally, our plan is to really engage a reputed offshore construction contractor to go and do a comprehensive survey of the overall systems, connecting systems in below the water, and which can be repaired will be repaired, and what need to be replaced will be replaced. But a clear picture will emerge after a comprehensive survey, but Jiva can indicate if possible, a rough.
I think that the issue of D1 well, we have to fix the hydraulic leak. We should cost around some $350,000. That's a level as such, because including the sealant companies and then the vessel required put together would be in the maximum order of about $350K. And the other one, the FSO is functioning properly. There is no issue on it. But the disconnection of the hose and rechanging the hose and all put together maximum about some 150 to 200K. So total it should be in the order of say 4 to 4.5 crores. But in the worst case, we can say the capex exposure, whether you call it as a capex and OPEX, but it should be in the order of say 5 crores. That's what we plan it.
Thank you, sir. That is very helpful in detail. And sir, the last question is on the gas front. So it's expected that September or October the APM prices will pick up again. So do you see any difficulties in the volume offtake from DROC?
First of all, as far as BAT is concerned, we work on the government notified prices have got no impact on BAT. We have a contact with GSPC that will continue as far as BAT is concerned. In DROC, what we have so far seen is even at in the current quarter, about 40% of our offtake has been on the premium segment, which means the consumers are paid $1 more than the government notified price of 6.1. Now, effective 1st October, we need to see how much of the price increase would really impact. We don't see that impacting that much in Northeast. They should be able to absorb. But because all major consumers have got only two sources of supply, which is both Oil India and as HOEC. And since Oil India will also be selling at the government notified prices, we don't see any major impact due to that. But we'll have to wait and see.
Thank you. I would request the current participant to rejoin the queue for follow-up questions. The next question is from the line of Jayesh Gandhi from Harshad Gandhi Securities. Please go ahead.
Hi, sir. So just a clarification. So the problem which we are facing is in both D1 and D2, right?
The D2, there is D2 gas well, there is no problem because as you produce the gas well, it also produces along with that some volume of oil. That oil cannot be stored in MOPU. It needs to be continuously exported into FSO through the hose connectors which connects between the SPM, the convoy to FSO. So essentially, when you produce from the gas well, also you'll be producing some small volume of oil which need to be continued to be exported into the FSO. As we pointed out, since there is a problem in that hose connection, so we could not produce the gas well also. Otherwise, there is no problem. So as soon as we find a weather window, we will send a team to go and reconnect these hoses and test the system again. then we'll be able to quickly bring the gas production and gas sales into resume it very soon. As far as the oil well is concerned, as Jiva was pointing it out, we are looking at multiple options to fix the problem. Most likely we'll be able to find the solution only post-monsoon for that. So our immediate focus is to bring back the gas well into production mode and get some revenue.
Okay. And so can you share what is the realization on gas that we achieved last whatever days we were working?
So the gas price we are getting is $20 per MMBTU. And I think you have mentioned about in June alone, we've realized about 13.45 crores. And the oil in stock is about some 6 crores.
Okay. And one last question, sir. So out of that leasing revenue that we get for our equipment, what do you expect we will get it in this quarter, in the current quarter, coming quarter?
Sorry, we didn't get your question. Can you repeat that, please?
So I think equipment leasing, we were expecting somewhere around $95,000 per day. So in this quarter, because D1 and D2 both would not be working, so will we get any revenue from equipment leasing or no revenue from that?
Because I think you explained that for the MOPU, we will get the revenue of $48,000 per day. For FSO, it will be zero till the production resumes. And we don't expect the whole quarter to go this way. We are expect this the fixing of the hose reconnection. We expect it to happen during the monsoon itself, during this period itself. As long as we get a weather window of 2-3 days is sufficient to fix this issue and resume the gas production, which we are monitoring the weather forecast and will be mobilizing.
That's all from my side, sir. Best of luck for future.
Thank you. The next question is from the line of Dharmendra Vora from Vora Wealth. Please go ahead.
Hello. Am I audible?
Yes, sir, you are audible.
Yeah. Just had a small request. In order of the propriety and transparency, I think BAT, probably investor community is looking BAT as a significant event in the operations of the company. So, don't you think, is it a material event in case of disruption or resumption of the activities? And it is not proper on our management to keep, provide timely information to the exchanges or the investor community at large. I know it's very difficult in the normal course of operations to really for this such kind of request, but I think that would be a welcome step. There's a lot of anxiety in investors as to wait for an entire quarter for what has happened and what is not. So I would request you to probably share your views on this subject.
We kind of agree, but I agree. It would have been good to have shared such information. But please understand, our effort whenever a problem of this nature occurs is to go and rectify the problem. And in this case also, we thought we will be able to fix the issue because this is only, there's no problem with the well. There's no problem with any of the process system. As far as D2 is concerned, things are going pretty well, and we had almost 3 weeks of production in June. We raised invoices, we realized revenue, and in fact, the first quarter of July as well, things were going very smooth. Suddenly, when the problem occurred, our immediate reaction is to see whether we can go and reconnect it. And our focus was on that, and we genuinely believe this can be done because we just decided we'll reduce the length of the hose and just simply reconnect it. We mobilized the vessel, we mobilized the divers, we went to go fix it. Unfortunately, the weather turned very bad, and we had to take a call for safety reasons not to continue with the operation. Now, so this is a phase, but I take your point that We look at what are some of the best practices, whether a monthly operational update would be a good idea to give, because we really don't want to, when you're producing from multiple wells, each time there's a problem in a well, we really don't want to see it as a major event. But I take your point that BAT has to be looked at differently because it is material in nature.
Yeah, I totally agree and probably acknowledge the kind of efforts you need to put in at that particular point of time. But probably after a couple of days, or when you come to realize that it is going to take a significant time, or whatever weather window you'll have to wait, I think it's a material event in the light of SEBI's material event disclosure. So probably I would request you to just go through that and probably take some probably consideration on this and come out with disclosures on this in future.
Thank you. Thank you. Noted. Thank you.
Thank you so much.
Thank you. The next question is from the line of Rohit Potti from Marshmallow Capital. Please go ahead.
Thank you for the opportunity. I just have a couple of questions. The first question is, any range of timelines that can be provided to resolve the D1 issue? So will it be, an upward limit of 5 months, 6 months, or anything like that? Is it possible to share?
As far as the D1 oil well is concerned, what we are looking at is post-monsoon. Typically, post-monsoon, you are looking at October, November period for that. As far as D2 gas well is concerned, within the monsoon period, we are looking at 2-3 days of weather window to go and fix the problem.
Perfect. So I understood the D2 well is a very short cycle, probably less than a week. So you mentioned there are 2 probable kind of problems that could be there. So if it is the severe problem which requires a deep sea diving mechanism, what is the timeline that would be, or the outer limit of the timeline there? Would it be 3, 4, 5 months?
I'm sure by end of this calendar year, we should be back on stream with both the wells.
Okay, so that was very helpful, sir. And my second question is with regards to regards to opening comments of Jiva, sir. So I think in the end he said that we are going to focus on the Cambay asset and the PY1, the drilling campaign in both these regions. And he mentioned something on capital infusion. Could you expand on that, please?
Yeah, this company is right now we have borrowed about some 300 crores plus. So we have to look at some strategic way of infusing additional capital into the company, which we'll be discussing appropriately with the capital requirements and reevaluation of the reserves and what our geologists are coming out with the numbers. Then we have to look at a capital plan thereon. Depending on the capital plan and depending on our cash flow situation thereon to it, we have to make a call on it, either the infusion of a debt or equity, subject to the board approval. So we'll be presenting something to the board, and if the board approves, we'll embark on the development.
And this will be post BAT commencement, or is it irrespective of that?
Rohit, we wanted to put it in such a manner that one job at a time. Now, unless I have a revenue stream which comes and meet my all obligations in time, that I cannot embark on another one. So we'll be doing everything only after BAT stabilization. Once the BAT is fully on without any hassle-free mode of operations, then we will embark on that.
Perfect. So this is very helpful, and congratulations on beginning BAT. It was a long project, and it's nice to know that it's begun, and there are a few teething issues which hopefully will be resolved by the end of the calendar year. Thank you so much for your transparency.
Thank you. The next question is from the line of Rakesh Parekh from Absolute Advisors. Please go ahead.
Thanks for the opportunity. Yeah, thanks for the opportunity. Just wanted to understand, with regard to D2 well, since the problems were going to Mopu news, so can it be done during this current monsoon time, and how soon it can be come on stream?
One is D2 gas well can be fixed during the monsoon period only. But we are looking for a right weather window during the monsoon itself, for a right weather window. It's difficult to give the time frame, but it is not a long-term issue. So we are hoping we're just looking at the forecast and looking at that. Yeah.
Okay. So it will be like a 1 week kind of a thing or something like that, right?
The work itself is 2-3 days work, but hopefully maybe by end of this month or early next month we should get the window. But things start getting better from September onwards. But we are not looking at monsoon to end, but during the season itself, for the right weather window.
Okay. And with respect to D1, what will be the time period required for completion estimated?
I think, as I said in response to a previous question, by end of this calendar year, we expect both the wells to be fully on stream.
Okay. And last question on FY1. Sir, your presentation mentioned that we have started production from April or May. So what is the quantum of gas we have started from FY1, and the sale price is just 3.67, or it is changed with the...
Well, the sales price as far as FY1 is concerned is as per the contract, which is 3.68. The volume that we are producing is roughly about 1 million cubic feet per day.
Okay. So it's very small. So means any scope to increase over, because we have capacity of 55 million cubic.
Any increase in FY1 production is possible only after drilling of new wells, which, as we said, we've done the technical studies. So we will, after BAT comes on full stream, then we will look at an independent review of those technical work as well as certain risk mitigation work before we embark on the drilling campaign in FY1.
Okay. Thanks. Sir, any last question, if I can squeeze it, just what is the level of debt at the end of 30th June?
What is level of debt?
Yeah, we have 313 crores.
Okay.
Thanks. Just I'll tell you the breakup. We have debt.
Level of debt.
313 crores, I think. Debt actually 313 crores out of primarily we are going about 119 crores or something to the HDFC Bank. 120 crores is HDFC Bank, and about Axis Bank is about 125 crores. Total put together all 278 crores. And Hindage, we have borrowed some 62 crores. So total put together ours is about 330 crore exposure, including some of the short-term borrowing.
Okay. Thanks. Thanks for that.
Thank you. The next question is from the line of Tejas Shah from Laser Securities. Please go ahead. Tejas Shah from Laser Securities, your line has been unmuted. Please go ahead with your question.
Yeah, there is no intimation to the stock exchange regarding windfall tax gain. Plus, the D1 well was closed much prior, means in June itself it was closed. Still, there was no intimation. This is on continuation with the earlier speaker. So, and even I had sent mails also rigorously to the new CS, but there was absolutely no communication. If you can throw some light on this.
I think to answer the question in respect to the previous speaker, and we've noted your suggestions and comments. We'll also look at the requirements. Our priority has been, our focus has been to address the operational issues as such, and we thought it is appropriate we do open communication once in quarter to everyone together. We will look at other ways of ensuring that there's a common communication and update happens. But right now,
The only reason why I'm pushing so much is, sir, people or investors are losing faith in terms of the communication if something goes wrong. The information is not private to all the investors. Information is only private, maybe to some people if it is there. If it gets leaked out from an employee, not from the director level. So it's a problem. So I request, no need to justify or explain, but it's a request. Either you notify or complete it out. Going to the next question, sir, our revenue is only right now from the DROC. Even after increase in the dollar pricing from 73 or 74 to 79, our revenue has not gone up to the level that the prices have gone up.
Yes, told by Ilango, there is a reduction in the offtake. Okay. Last quarter, the gas was 0.76 billion cubic feet of gas in Assam. That has reduced to 0.65 billion in the first quarter of this year. So effectively, there is a reduction in the sales. The reduction in the sales is compensated by increase in price. And similarly, the condensate of Assam is 15,932 barrels. That has been reduced to 12,900 barrels. So this reduction in offtake, basically it is nothing to do with the well performance and availability to deliver the gas. There is a poor offtake, and that has reduced the sale gas. But however, the increase in the price has compensated. That's why we have got an additional revenue of additional 12 crores. Similarly, we have got 13 crore new revenue comes from the BIT block, but 1 crore has come out from the BY1. That is the state of affairs at the moment. As I think any significant increase in oil and gas companies have to pay. One, we have to be able to sell the oil and gas and produce and able to sell it and get a right price. Out of that, today we are getting the right price, but our offtake is less, our production is less in BIT. These are the reasons for that.
Thank you. The next question is from the line of Yogesh Patil from Centrum Broking. Please go ahead.
Thanks for taking my question, sir. So my question related to upcoming gas price hike in October 2022. So APM gas price formula mostly marked to various global gas prices, which are at a record high level. So do you think the government can tweak a formula? And lastly, do you see any probability that the government can introduce cap or ceiling to the APM gas price going forward?
Yeah, I think if I rephrase the question, you're asking about whether there is a possibility that government can tweak the gas pricing formula and introduce any other new restrictions from that. The honest answer is really we really don't know. Good thing is we hope if you look at the gas revenue going forward for the company is predominantly from BTC and PY1, both are governed under different price regime. Iraq is, of course, very important asset, and any change by the government would have an impact there. What the government will do is really difficult to predict.
Okay. And sir, lastly, could you please share what is your average cost of a gas production at EBITDA level in dollar per MMBTU? That would be helpful.
Our Assam gas production, mainly the gas field is Assam. It is about less than $1 per MMBTU, and but the taxes like royalty and other is ad valorem. So whatever the price we get paid, and we have to pay 10% as a royalty towards it. But for that, our cost of production is less than $1 for that. But in BIT, we are just break even with the gas sales, but we have to put the oil well on production to make some meaningful profit there onto it. Otherwise, it will be eat away with the operating cost.
Okay, thanks.
Thank you. The next question is from the line of Vaibhav Bhattacharyya from HNI. Please go ahead.
Yeah, hi sir. Thanks for providing the opportunity. So on this, pricing freedom on oil sales that has been notified by the government, how do you see that? Because it can work against as well, given that oil companies can probably make Russian crude as benchmark rather than Brent, which was earlier for their marginal supply. So how do you see that? Can it impact our realization in BAT whenever it comes on stream?
Yeah. See, what we have planned is to follow the e-auction model that we followed for discovering the gas price. Essentially,
right. My question was around oil only, not gas. Gas is pretty much clear, but on the oil is what my question.
I was saying that for us, our plan is to replicate that same model for oil also, which essentially today the policy is that you cannot export the oil out of the country, but you're free to sell it to any of the domestic refineries. So we have a group of public sector refineries as well as private sector refineries. So what we were thinking is to, share the part of the settled crude sample with the refineries and conduct the e-auction, which is the very most transparent way of discovering the prices. And obviously, to avoid any Russian-related impact, because you are not forcing anyone to buy the crude, you are only telling them that look, this is the base. You will know, you will benchmark the crude based on its quality, preferably related to Brent, and people will be free to quote a premium or a discount to that. So we do not expect. We expect to get a fair and reasonable price and discover it through a transparent mechanism.
Got it. Understand. And so not for FY23, but for FY24, assuming all things are, all the oil wells are completely on stream, what would be the approximate, I know exact numbers are difficult, but what would be the approximate cash generation that will be there, assuming oil and gas prices stay where they are currently?
I think I don't want to have a revenue projection there onto it unless the field is coming to the revenue mode with a sustainable and comfortable mode. That would be something which is incorrect on my part to project something.
Right. Yeah. I actually had this question because there was earlier a question on the capital raise as well. So I mean, if both the wells are in BAT are now, I think we will generate substantial cash. So just wondering what would be the need for further capital raise.
See, the capital is required for in oil and gas field, two way of looking at defer the monetization or early monetization. And looking into the current market, every company would like an early monetization. So the capex required is for early monetization. That is what we are looking at.
Okay, understood. Got it. That's it from myself. Thank you.
Thank you. The next question is from the line of Yash Mandavewala from Mandavewala Family Office. Please go ahead.
Hi, am I audible?
Yes, sir, you are.
Okay. Jiva sir, can you just elaborate on the cash flow position, as of 30th June? So what is the amount of liabilities that are going to come due in this financial year? And against that, what is the current cash balance?
I have a working capital issue. I cannot say no to that. But these working capital issues are not very difficult to manage. At the moment, I've got some revenue from BAT, and with the good gas price I'm getting it from the DIROC, I'll be able to manage all my obligations. Okay, I have some teething trouble with a couple of months, and which I will be able to manage with my existing contractor. And,
in case we are not able to get BAT, on stream in the next, 5 or 6 months, will the cash flows from the rest of the fields, DIROC, even at the higher prices, will those be enough to meet the liability?
Absolutely, it could be able to meet with the liabilities because my liabilities are not insurmountable. It is a very small sum, sir. So when you look at an oil and gas companies in the operating assets, it's about 30-40 crores. It's not a big deal. So we'll be able to manage it, and we are not finding it very difficult to do that.
Okay, so just for reference, including the debt that we may have to repay this year and any sort of capital.
We have lined up the funds for it. Debt repayments are not an issue at all because it is only a quarterly repayment for the Axis Bank and monthly repayment for the HDFC Bank. So our debt repayment obligations is nowhere getting affected by any means whatsoever.
And are there any capital liabilities, so for equipment or anything of that sort that we need to pay?
Nothing called as capital liabilities at all. We are now having only an ongoing working capital liabilities, working capital issues which will be able to surmount, which will be able to come out quickly.
Thank you. I would request the current participant to rejoin the queue for follow-up questions. The next question is from the line of Akshay Asmira from Nirmal Securities. Please go ahead.
Hello. Thanks for taking my question again. So just I wanted to understand from you, sir, as you have mentioned that there is no penalty in case of non-supply of gas to GSPC, whatever we have committed. So when is this period going to expire? As you have mentioned that for the first year there is no penalty, and what could be the penalty going forward? That is my first question.
So the first year is we started the supply in June. So till June 23, there is no penalty for supply or supply. There is no supply or pay or take or pay clauses. After that, we agreed for 75% take or pay clause. Where if they are not able to take the gas, they will pay, and if they are not able to supply, there are mechanisms that we can top up the supplies during the period that year. At the end of the year, there will be a reconciliation whether on days when we were ready to deliver, whether they have taken the gas, or when they were ready to take the gas, whether we were able to supply or not. So that's how we've structured we've given a 1 year of no obligation on one side, and we've also kept the volume at 10 million cubic feet. Though we would be in a position to deliver about 12 million cubic feet. Obviously, we kept the contracted volume as 10.
Understood, sir. Understood. And sir, just a quick one on the MOPU side also. In worst case scenario, do we need to retrofit the rig and the MOPU? Do you see any possibility of that kind because of the issues and damages to the structure specifically?
So there is no damage to the structure of MOPU. So MOPU does not require any retrofitting other than on the top side, the equipment need to be replaced by the Expro, who is the contractor, who has the, as you know, we are operating on the MOPU as such is owned by the subsidiary company of HOEC, and the topside facilities are supplied and operated, maintained by the Expro.
Okay. So there is no, is there any need in your understanding to strengthen the legs of the rig that we have deployed over there?
No, there is no. It's a classed structure.
Okay. Got it, sir. Thank you. I'll get back in the queue for my follow-up question.
Thank you. The next question is from the line of Rikesh Parekh from Absolute Advisors. Please go ahead.
Thanks for the opportunity. Sir, just wanted to understand what is the quantum of crude we have accumulated till now?
It's about 15,000 barrels.
15,000 barrels.
15,000 barrels.
Okay. And okay. Thanks. That's it from my side.
Thank you.
Thank you. The next question from the line of Hitesh Doshi, an individual investor. Please go ahead.
Sir, so my basic question is that what is the
capacity of the test separator and production separator? And can it happen that our both the wells start operating and we don't have the proper separator capacity or something like that?
No, we have not so far put both the wells simultaneously on production so far, right? But the separator, both the separators together will be able to operate the volumes with some modification that the Expo will be undertaking. So we do not expect this to become a constraint as soon as the D2 well is ready, the D1 well is ready.
Okay, sir, thank you very much and wish you all the best, and I hope we come out of the difficult times soon. Thank you so much.
Thank you so much.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Elango for closing comments.
Thank you for your understanding and all the questions. At the macro level, prices of both oil and gas are strong and expected to remain so. We will remain focused on bringing BAT to a stable operational mode. Our plan is to engage internationally reputed consultants and contractors post-monsoon to find permanent solution. This may involve repairing and, where required, replacing the connecting system and few topside facilities to bring both the wells of BAT on sustained production mode. When both the wells are brought on full production mode, the revenue generated will be adequate to address all our short-term challenges. Post that, we will be able to invest and unlock the potential in our existing portfolio to continue to drive the production growth. We had sincerely hoped that we would be in that position by now, but looks like we will have to wait for the monsoon to end to reach that position. Thank you for your continuing support, especially during this challenging period. Thank you.
Thank you. On behalf of Hindustan Oil Exploration Company Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.